Hello everyone, this is Gary Muir, your instructor, and this short video will discuss our next chapter in cost, which is going to be chapter 10. I do have showing here a template that I use quite often to solve our price and usage variances for both product cost categories. We'll cover this shortly, but I did want to review first our due dates. The class prep videos are due by tomorrow, April 10th, which is Wednesday at midnight. And then our exercises and problems are due a week later on the 17th, with our exam due on that following Monday. Again, if you're in good shape as far as progression through the chapter, I can certainly open up the exam before April 22nd. So the problem that I chose to help us review Chapter 10's content is problem 63, located on page 575 of our textbook. I've already have the numbers filled into the template that we are going to use from our problem, and so that will give me an opportunity or a chance to discuss where the numbers are coming from. So beginning on the left side of the template, I'm starting here where the 355 is. That's the actual price per, in this case, pound that we pay for the material. And if you look in the book on the bottom of page 575, they give you that information: materials purchased and used 69,000 pounds at $3.55 a pound. So I'm simply multiplying these two cells together to get my total cost for purchasing the material. So in other words, I'd be debiting the raw material inventory account and crediting the accounts payable if I purchased the inventory from our vendor for $244,950. At the same time we record the purchase, we also record the price variance. So what the company had done was, before the year started, had established here a standard price for that material at $3.50. And if you look at our page number 575 again, you can see that $3.50 there in the standard information. Now what we're trying to do with the price variance, and all that variance means is price difference, right, is compare the actual price, which is in blue, to our standard price, which is in green. And we're looking at that 5 cents difference and saying, wow, we paid more than what we thought. Well, if we paid more than what we thought or budgeted for, that is an unfavorable price variance. And I have the DR designation with it because when we record the purchase of this particular material, we record the price variance, and unfavorable price variances will always have a debit entry. So I've made the entry on the next page here. Oh, that's a different one. That's for closing it, so sorry. But basically, I would be debiting that $34.50, the dollar amount of the difference, when I make that entry. On the right side of the material price variances, so I'm looking at here, the right side now, I'm looking at how we use that material in production. So in this particular case, again, you'll notice I have my standard prices, $3.50, $3.50 located here. So what am I comparing? I'm comparing what I used to what I should have used. For the production level. What I should have used. The author calls this the allowed quantity. So some of your questions you'll encounter is, what was allowed for the actual production? So the key word here is looking for the information. We have to give it to you. What was the actual production in units? So if you look at the bottom of page 575, that number of units is 6,000. So I have a small computation here at the bottom showing that 6,000 units times 12. Now where did I get the 12 pounds? Well, if you look at the standard for materials, it says I should have used 12 pounds at $3.50 to come up with a standard cost per unit of $42. I'm simply multiplying the 350 times the 12. So not only did we establish before the year started a standard price, we also established a standard quantity. And that's what's nice with this template. I'm measuring both the price variance and the quantity variance. And you'll notice here that if I multiply the 6,000 units that we actually made times the $12 standard pounds, we come up with 72,000 pounds. Well, if you look at my gray number, which is the 69,000, and my purple number, which is the 72,000, you can see I used less material, which is great. Maybe we were more efficient, maybe we had less rework, less waste in our production process during this period. So that's awesome news. And that's why we now have a favorable usage variance here of 10,500. So when we compare now the price to the usage variance, one is unfavorable, one is favorable, we can net the two together or take the difference and say, well, that difference is 7,050. Obviously my favorable number is bigger than my unfavorable number, so in total then I have a favorable material variance of 7,050. So let's make that journal entry for the usage. And if I'm going to add a worksheet here, I'm going to debit the standard cost to work in process inventory. I'm going to pull it out of or credit raw material or direct material inventory. And in between, I'm going to have a usage variance. In this case, it was favorable. So I know that a favorable variance will always have a credit entry. And I know that favorable variance was 10,500. The raw material, what I'm pulling out of, is associated with my third box, which is right here. This 241,500 is what I'm pulling out of that raw material. And then what am I putting into work in process? I'm putting actually the blue number here, the 252, into my work in process account. And obviously we will always want our debits, right, to equal our credits, and we see that here in this case where they will equal. So this is the entry to record what is going into my work in process inventory account. And I'm again using my templates that I have here to allow me to make that entry much easier. Now if we go forward here, we also, for Chapter 10, have to concern ourselves with our labor cost. So here again, I'm going to use the same problem, problem 63, and look at labor. And if we look at this information, they give us the actual labor cost of $118,800. So this number here is what's given. And I'm going to fill in, going backwards, basically, the other information. That number generated was from 10,800 hours, this is hours here, of actual activity. And obviously if I take the 118,800, divide by 10,800, I get the $11 actual hourly rate. And by chance, it's just coincidence, that was our standard also, was $11. So in this case, I have no variance. I have no rate variance, it's called, for labor. So I don't have to do anything with that at this point. Next is our efficiency variance on the right side. And again, the purple number is the key number here, is what we were allowed for our production. So we sometimes will call this the allowed hours, just like we had with the material, the allowed pounds in that case of material usage. So I'm going to again take our actual production, which is 6,000 units. So we actually produced 6,000 units. The 1.7 hours is again coming from our standard cost section. And if you look at the standard quantity amount, we should be able to make 1 unit in 1.7 hours. That's the standard hours allowed for making 1 unit. So if I take our actual units times 1.7, we should have made those parts in 10,200 hours. So that number is my purple number, the 10,200. I multiply it by the standard rate, which is 11. I should have paid out in wages for this production level 112,200. However, I paid more. I paid more because, again, I had more actual hours. So for the rate, or excuse me, for the efficiency variance, I'm comparing my actual hours to my allowed hours, and I can see my actual hours are greater than my allowed hours, which means it's unfavorable. So now when I'm recording this entry, I'm going to again put it into WIP. The 112,200 is what I put into WIP. So I'm going to make this my entry here right below. So I'm going to debit, right, work in process inventory for my labor cost, for the direct labor cost in production, the 112,200. I'm also, at the same time as I'm recording my payroll entry, I'm going to record my variances. Well, I'm only going to have one because my rate variances were perfect. There wasn't any. And here, since my efficiency variance is unfavorable, I'm going to be debiting that account for 6,600. I suppose I could put the labor rate in here just so we have an idea of what that would look like. I'm assuming it was favorable, and I know it's 0, but I'm just going to make the entry anyway. And then wages payable would be the leftmost entry. And what did I actually pay? I paid $118,800 in wages during that same time frame. So that's my labor entry, and you'll see those entries throughout the exercises and problems for Chapter 10. It's just, again, knowing when we debit, knowing when we credit the variance amounts. As a review, debit when the unfavorable variance, credit when it's a favorable variance. So that's what we're looking for here in Chapter 10. Also in Chapter 10, like in other chapters, we always will need to close the variance accounts. Close means I zero out the balance, right? So make variance accounts 0. And that's the goal here with this closing entry. Remember, we cannot have financial income statements, balance sheet numbers with estimates in them. I mean, we're recording everything. As you can see in our last entry, the work in process debits here are standard. They're budget numbers. They're not real numbers. Well, you certainly can't have that when you present a financial statement for the IRS or for the bank. So at the end of the period or end of the year for sure, we have to make these closing entries, which basically means I reverse them. So my usage variance was a credit balance. It was a favorable variance. I'm debiting that account, and then I'm going to credit the price variance on material because that was entered as a debit balance. Crediting it will, right? This is unfavorable. It's got a debit balance. I'm going to credit that account to get rid of it. And at that point, we adjust both entries against the cost of goods sold. Now I do want to make a note here on the closing entries. I close this entry as a material only. In See Now and Test, the closing entry will, in most cases, let's just say all cases, they want us to remove or close unfavorable variances first. Then close favorable variances. So if I, for instance, would have a unfavorable rate variance from my labor, or we did have an unfavorable efficiency for labor, I would combine that with my unfavorable price variance here, $34.50, and close them together. After closing the unfavorable variances, then I would go ahead and close the favorable ones together. Both material and labor would be combined into one entry. So just be aware of that scenario in a lot of your exercises and problems that you do in Chapter 10. Okay, one other concept I would like to talk about is, again, I'm going to use problem 63. In this case, part 3 talks about, well, something happened and they want to change the scenario. So in part 3, they give us new information, and I'm just talking about looking at labor. And in this case, here again, for whatever reason, the rate variance is 0, but they changed the actual hours to 9,000 from what it was previously. Previously it was 10,800. So in this particular case, it generates a much larger efficiency variance. So it's just a different scenario. So on your own, you can look at that and review that. That's just for your reference. I do show the entries to record the materials. In this particular example, it's a price variance, which is, again, unfavorable. So the actual price must have been more than what we thought we would pay. Now the author uses SP, AQ, so forth. SP is the standard price for the material. AQ is the actual quantity. I tried to use those same letter designations. Well, I did, right? AP is here, SP is, right, the green numbers. I tried to use those in my templates so you knew what I'm multiplying against. So hopefully these templates again will be a good guide for you as you go through your Chapter 10 discussion. And then recording the materials in work in process. Again, that's the right half of my template. I'm taking my SP number times my SQ number to get what amount is going into work in process inventory. So I'm debiting that account. I'm crediting the price variance because it must be, oh, that is not correct. That should not be price. Oh my goodness. This should be usage variance. Because I'm going into WIP. So that should be usage variance. Actual quantity minus the allowed quantity is what I'm putting in as my usage variance. And then what did I pull out of raw material inventory? That's my actual quantity times the standard price. Here's my labor entry. Labor entry is nice. They will always record both variances within one entry, both the efficiency and rate. In both cases here, they are both, looks like, unfavorable variances at the point of entry. Okay, disposition means closing of the entries. Just be aware, kind of what we kind of did in when we talked about process costing and where we were, I'm just trying to think of how we did it in process costing, where we had variances there. We need to identify when, oh, I know what I was talking about. When we were talking about Chapter 4, job order costing, we had under-applied and over-applied, and whether it's material or not material. Material means large. So that case, if it is a large, again, price or usage variance in Chapter 10, well, then we're supposed to allocate it right across multiple inventory accounts, including cost of goods sold. And I want to identify one particular variance which is different, and that's the material price variance here. Since we record that price variance when we purchase the product, right, we need to adjust our raw material inventory along with work in process inventory, along with finished goods inventory and cost of goods sold. 4 accounts versus what we normally have done is just done WIP, finished goods, and cost of goods sold. And that we certainly will do also, but in this case it's only on the other variances. Now what do I mean other variances? Well, we only have 3 left out of the 4, so we have a material usage variance, a labor rate, and efficiency. So those are the 3 remaining. And those, obviously, we don't record these variances until we get to the point of putting them into work in process. So that's why we're starting there instead of our raw material inventory. Remember the flow. We start in raw material, we use that material in WIP, and then finally it's completed with labor and overhead applied, right? That then, when completed, goes into finished goods, and then finally cost of goods sold. That has been the flow of our costs throughout the course. So we'll continue that. So this discussion, if you want, is 554 in the textbook. Please review that for the exam. There are some questions on whether the variance is immaterial, which is small. Well, then we can just code it to cost of goods sold. But if it is large variances that we're dealing with at the end of the year, well, then we have to prorate it not just to cost of goods sold, but to the other inventory accounts. So that's what we're shooting for there. Okay, I have one more problem to kind of wrap things up in Chapter 10's discussion here. These are not in the book. These are ones I found from other courses or from other textbooks. I grabbed this one because I liked how it was laid out. It's a different look a little bit, but has the same information in it. I want to use scenario 1 here, and you'll notice we have a standard cost sheet. This is what we think it should take not only for material and labor, but also our overheads are in here, both variable and fixed. Now, we won't talk about the overhead in Chapter 10. We will talk about the overhead when we get to our next chapter. And I'm going to have to look because I don't remember. Going back to my class materials here. Oh, Chapter 10, the overhead section. If we look at Chapter 10, just the material labor, that's all we're going to look at here. So we are only going through page 554 of our particular book here. We'll cover the rest of Chapter 10 when we get to our next discussion after completing the first Chapter 10's information on material and labor. It's a little unusual, and in fact, the reason we're doing that is just that there's not that much work in 14, so we're kind of trying to level the playing field here a little bit in order not to be overwhelmed with all the variances in one particular chapter. So anyway, we're only going to look at the material and labor section for this next test. And I want to point out some things here. Remember that we have two distinct things here. We have our standard information on the left, both pounds, or measurement of pounds in this case, as well as price per pound in this case. The labor should take us 0.2 hours to make 1 unit, and we normally pay our direct labor employees $20 an hour. Well, what is this then? This is a unit cost. So what is the standard cost per unit? It's $5, which I'm simply multiplying the 2 pounds times $2.50, and it's $4 for labor to make that particular unit. So you'll notice here then I have some series of questions. Well, the direct material cost is total of $5 based on what? 2 pounds of material times the standard price at $2.50 per pound. So often, again, I ask some of these questions on the exam, and students will put in $5 for the standard price for that, or standard price per pound. We have to be careful of what we're asking and what we need to put in those particular for answers. Next is the labor cost is 4 based on 0.2 hours and at a cost of $20 per hour, which would generate what? $4 per unit, right, to make that particular product. So that's all we're looking for here. And they even come up with what is the standard cost per unit. Well, that's $11.50. What does it take to make 1 unit? We add them up, right? All 3 product costs. And overhead, like we have been dealing with, has been split into its variable and fixed parts. If I were to make 400 units, then obviously it would take what? 800 pounds of material, and multiplied at $2.50 a pound, we should spend $2,000 for material. For labor, it would take 80 hours, right? It's 0.2 hours per unit. If I'm making 400 units, that's 80 hours, and with a cost of $1,600 for labor. So again, that scenario is just to help us get used to the terminology that will be used throughout this chapter. Now, the next problem is problem 2. Here I actually am doing a form, an actual template, which I have shown here. It's already filled out. I just wanted to make it a little shorter video and just kind of point out some things. So let's take a look at the standard cost card here. And it notices that we're making a gallon of something, 64 ounces in a gallon. So we should use 0.03 and at a cost of 0.03 per ounce. So in a gallon, then I'm spending $1.92 per gallon or per unit. That's my measurement. Oh, excuse me, it's a half gallon. It's not a full gallon, sorry. And then labor is 0.05 hours to make that half gallon. And my labor cost is $12 per hour. So my cost per unit is 60 cents. $2.52 is my prime cost per unit. So I'm just kind of looking at not only my unit cost here at $2.52, but I'm also concerned or need to use my standards, which are on the left side here for this particular company. So they again give us the actual results. During this period of time, I've produced 30,000 half gallons. I did change the scenario a little bit here with the ounces purchased were 2.3 million at 2.5 cents per ounce. But my used is some other number. Now, with materials, I have beginning ounces of 100,000. I have ending ounces of 75. So if I were to look at how much did I use in the period, I would take my beginning of 100,000. I would add my purchase level, which was 2.3 million. And then subtract my ending, which was 75, to give me how much did I use in the period, which is now going to be 2,325,000 because I used 25,000 more. My inventory level went from 100,000 ounces to 75,000 ounces. So I must have used more than I purchased, right? So those are then going to be used to complete my template. So you'll notice here, I purchased in my yellow 2.3 million, and here's my gray number, 2.325 million, as far as how much did I use. I actually paid 2.5 cents. But if you look at our template, what was the standard? The standard was 3 cents. So if I go back to my problem 2 here, you'll notice that the 3 cents is right here in my standard section. That's what we thought we would spend, is the 3 cents. That was the budget number for our ounces of material. So that's what I used here then in my green number, 3 cents. And again, the 3 cents is used in 3 parts of my template, both in the analysis of the price variance, which again I spent less than I thought, which is going to give me a favorable variance. And who do I thank for that? Well, that's the purchasing agent. They buy the material, right? So they would be the persons that would be in charge of that area. And if it was unfavorable, we would have to talk to the purchasing agent and say, what happened? How did that happen? Next, I have to figure out, well, if I use 2.3 million, 2.325 million, how did that compare to what I should have used? So, here again, we have to determine what was my actual production level. We produced 30,000 gallons, half gallons, I keep saying gallons, 30,000 half gallons, and I should have used what? The standard was 64 ounces. Well, that gives me 1.92 million, right? That's my purple number here, the standard quantity allowed. And I look at my used amount, and boy, that's quite a difference. So we used a lot more than what we thought, which is unfavorable. And we look at how much that computation is. I'm simply multiplying the 2 numbers in each box, right? Here I'm looking at 0.03 times 2.325 million. And in the other box, in box 4 here, I'm looking at 3 cents times 1.9. I spent more, right? That gives me the unfavorable variance of 12,150. I compare that to my favorable. I net the two because they're opposite, right? Gives me a net unfavorable $650. Now, who is responsible for the usage variance? And that's production, right? The production department has the responsibility for control over the material used. In this case, you know, there could be spill, there could be theft, there could be maybe it was not good, we had to throw some out, waste, that kind of thing could have caused that significant difference in usage. But that's what the standard cost does for us. It allows us to see where is our problem area. We did very well on price this time. We didn't do so well in production. We need to find out why that happened. Also, we do the analysis for our labor, same issue. We're going to take our actual information on the left with the blue number at 12.25 and compare it to what we were thinking we would pay, which is $12 per hour. The hours that were actually incurred were 1,525, and we compare that to the allowed hours. Now here again, I'm taking my 30,000 actual production here, and I'm going to multiply it by the standard hours allowed per half gallon, right? So now we're dealing with hours instead of ounces because we're in the labor section. And we came up with 1,500 hours is the allowed hours. And this 18,000, yes, is what I'm going to debit to work in process. But at the same time, again, I have a unfavorable variance, which causes a debit entry, right? I'm going to debit labor efficiency variance. And in my reality here, I have another debit for my rate variance. I paid more. Maybe there was some overtime here that caused me to have a rate variance which was more than what I thought. So in this case, the unfavorable rate and unfavorable efficiency variances gives me a total unfavorable, right, labor variance. This time we're adding the two because they're in the same direction. And again, I have some causes here. Rate, I talked about overtime already, but with efficiency, maybe we're not trained well enough, maybe we had new equipment, maybe I had people that were missing and I had to put untrained people in positions. This is again another reason why standard costing is very often used in production to help us pinpoint where our problems are. It's hard to control an operation when you don't have a comparison to what should have been done, right? You can't talk to somebody about their speed of operation or their hours when you didn't tell them what the standard was or what is the hours I should be shooting for. And that's the goal. It's a communication tool, right? With you as the controller or cost accountant to the production personnel. So I hope this review does help with what we're trying to accomplish in Chapter 10. Again, we're only looking at the material and labor sections of Chapter 10. The overhead will be talked about in the next chapter after the next exam. So let me know if you have any questions or if I can be of any help. Thank you for your time and have a great day.